Hey there, savvy news decoders. Welcome to Capital Decoder News, where we break down the day's biggest stories so you can navigate the chaos and find your next opportunity. Today we're tackling, first, the Fed's latest rate decision, who's winning and losing. Next, skyrocketing energy bills and how you can fight back. Then the housing crunch, why it's so hard to buy or rent a home. And finally, big shifts in the U.S. job market. Grab a coffee, sit back, and let's decode today's top headlines together. First up, the Federal Reserve is keeping interest rates high as it continues its inflation smackdown. Jerome Powell basically said, "We're not done yet, folks," leaving borrowing costs at their highest levels in decades. Who benefits? Savers with high-yield savings accounts or Treasury bonds. You're finally getting paid to park your money. Banks, they're profiting from the higher interest on loans. Who's losing? Borrowers, credit cards, mortgages, car loans, everything costs more. Businesses reliant on cheap debt. Think real estate developers and tech startups. How you profit? Open a high-yield savings account. Some banks are offering over 4% interest. Finally, some good news for savers. Check out Treasury bonds, which are considered super safe and now offer competitive returns. If you're in the market for a house or car, try to negotiate or wait. Those high rates aren't going anywhere for now. Next, let's talk about energy bills because, wow, they're brutal. A combination of high natural gas prices, aging infrastructure, and green energy investments has sent electricity costs through the roof. Who benefits? Energy companies. Big names like ExxonMobil and utilities are raking in profits. Renewable energy firms, they're winning government incentives and passing the cost to consumers. Who's losing? Households. The average American is spending over $200 a month on utilities, up 20% from last year. How you profit? Think long-term, install solar panels or switch to energy-efficient appliances. Federal rebates can cover up to 30% of your costs. Investors? Consider energy ETFs like XLE for traditional energy or ICLN for renewables. Short term? Cut your bills with smart tech like programmable thermostats or time-of-use electricity plans. All right, housing fans, it's bad out there. Mortgage rates are sitting near 8% and inventory is tighter than your favorite jeans after Thanksgiving. Meanwhile, renters are facing double-digit increases as landlords pass on rising costs. Who benefits? Homeowners. Rising home prices mean more equity. Landlords' high rents equal bigger returns. Builders. The housing shortage is good news for those who can actually build homes. Who's losing? Renters. Finding a place to live is becoming an Olympic sport. First-time buyers' affordability is at historic lows. How you profit? Renters, negotiate your lease. It's a competitive market, but some landlords might prefer stability over chasing top dollar. Investors, consider REITs, which are real estate investment trusts focused on residential or commercial properties. They pay dividends and let you invest in real estate without buying a house. Buyers, patience might be your best strategy. Look for distressed sales or fixer-uppers as rates cool demand. Lastly, let's decode the job market. Unemployment is low, but the landscape is shifting. Tech layoffs are still in the headlines, while sectors like healthcare, green energy, and skilled trades can't hire fast enough. Who benefits? Workers in healthcare, clean energy, and trades, welders, electricians, and nurses are in huge demand. Companies automating jobs, think AI startups and robotics firms. Who's losing? White-collar workers in tech and finance, the hiring boom is over and layoffs aren't done. Recent college grads, it's getting tougher to land entry-level roles. How you profit? Reskill. Consider certifications in green energy, AI, or healthcare. These industries are practically begging for workers. Job hopping, negotiate aggressively. Employers in high-demand sectors know they need to pay to keep top talent. Investors explore ETFs focused on healthcare like XLV or clean energy. AI-focused ETFs like BOTEs are also worth a look. And that's your Capital Decoder news for today. From the Fed's rate moves to skyrocketing power bills, housing struggles, and job market shifts, there are plenty of opportunities if you know where to look. Key takeaways. 1. Fed rates are high. Savers, this is your moment. 2. Energy bills are spiking. Consider solar or energy-efficient investments. 3. Housing is tight. Explore REITs or wait for better buying conditions. 4. The job market is shifting. Reskill and focus on growth industries. Remember, none of this is financial advice, just a roadmap to help you decode today's chaos. Do your research, stay informed, and don't invest more than you can afford to lose. If you enjoyed this video, hit like, subscribe, and turn on notifications. Let's keep decoding the news and finding opportunities together. Until next time, happy profiting.